Traders, how you doing? Happy New Year, 2016. I'm filming this on January 2nd. I want to do a video. It's been about a month or so. I've been doing about once a month, and wanted to do an update here. It's definitely a time to be very focused. If you are, generally more long in the market in general, I'm seeing some warning signs here that we're going to come down a little bit lower, and I've got a number of ideas I'm going to share in this video with you guys as well as put together another video that has detailed a lot more symbols with regards to entries and exits and targets for each one. So I'll put that together as well too, and you'll see that on my YouTube channel soon after the release of this one. This one I want to talk about first off with the overall market. Looking at the major ETFs that I track, the QQQ here. You'll see here that we on the daily chart we've made kind of a triple top, or actually a double top, and then an attempt to come up here. You notice there's a nice support area here about $110 a share, and there's resistance at about 116. Okay, so it's a $6 area we've been playing in since this gap up here back in mid to late October, okay, of last year. So about two plus months ago. All right, and you'll notice that here too, where we came up. Okay, and went up to this just above this previous high, came down, went back up, went a little higher, came back down, and now right in the midst of it. Okay, so that's your line in the sand. If we can break these lows with any sort of authority, I think we can go down and reach lower prices, maybe the $100 mark here. Okay, in the short term, weekly wise, you can see the average weekly moves here. I mean, it could take 4 to 8 to 10 weeks to 12 weeks to get back down there after it breaks, or it could be really quick. As you can see, this took 2 weeks to get all the way down here, but then it reversed right back up. Okay, so keep that in mind. But I'm watching this weekly chart, and it's looking tired here. Okay, we've got volume that came in. It came up here in diminishing volume. Now, granted, it was the holidays, so the volume is a little bit lighter in general anyway. So it's hard to get a gauge from that, but you notice it came down here hard in volume and then has popped up here lightly. I'm leaning short in general, okay? And I'm going to talk about a number of symbols here, actually probably more in my other video. So if you want to, that's a paid-for video on my YouTube site, YouTube channel. So you can go ahead and sign up for that and take that if you want. Once I get it released up there, I'll probably try to do it either later today or tomorrow. But if I'm saying short on some of these names, if you're long, you may want to cull your position. Again, follow your own plan, follow your own method. Okay, these are just what I'm seeing, and it doesn't mean it's going to happen. Okay, this is why I trade and I use stops. Okay, because I'm not always right about the direction, nor is anybody, as far as I know. And that's why I have to have stops. So your line in the sand here is 110, and the top end is 116. Now, if we can break above 116, I'm looking at, you look at relatively strong stocks. So the long stocks I share on my videos, look for those long if they're still strong. Okay, those are the strong ones. And the weak ones, if we break the low here, look to get short. Okay, you don't want to be shorting the strongest ones typically when the market starts to fall apart. If it does, and I think it's going to in the next couple months, I think it's going to have. We're going to go down, and I think we're going to go lower, below these 110 lows on the Qs and the Spies. I'll show you the Spies here shortly. Okay, that's just my take. Okay, not my think. I think, but my take. But if I'm wrong and it comes above 116 and I'm short in certain names, I will have stops in place for those, and I will get out and take my small loss. Okay, and that's another thing is I want to talk in general about if you're looking at playing a 116, 110 level. Say you say, okay, well, line in the sand's 110. If it breaks 110, I want to get short. Okay, great. Where's your stop going to be? Well, if you're using the band, your stop needs to be up above 116. That's a $6 stop, right? Okay, that's fine. Okay, then the question is, can you get $18 in reward for that kind of a risk, a $6 risk? Okay, $18 in reward on this particular name. Well, an $18 move off 110, okay, would be, 100 would be 10. Okay, another $8. You'd have to move all the way down to 92 to get 3 times your risk. Okay, which is quite a tall order, and I wouldn't expect it to happen in 2 weeks like it did here, although it could. Okay, anything can happen. All right, so keep that in mind. You always need to keep engaged with how the market moves, how long it takes to move, where your stop is. If I goes under 110, see, I think it pays off more to get short here right now. Okay, with a smaller, tighter stop, right? And then you don't have to get as much reward. Okay, you're anticipating the breakdown of this area. But if you're wrong, you got to take your stops. You can't sit there and go, nope, I know it's going to go down anyway. Take your stop and get out. However, Okay, for the advanced folk out there. As you know, if you've done this, and I know this is what I do, okay, with regards to tornadic formations, expanding ranges, inverse wedges, play the game, because a lot of times people are looking to pick off, pros are looking to pick off stops up here, okay, and suck people on the long side that look basically at a high and low, say, okay, it's 116, all in, long. No, that could be the worst time. It could be a peekaboo breakout that fails. Okay, and I'm going to talk about a number of names here. I found a number of stocks, a ton of stocks on both ends, mostly short though, and that also leads me to my bearish bias here in general. So be aware, okay? So there's the cues and my thought processes around it. Spies, you'll notice a little bit more weakness here, right? It's got a lower high here. It made a higher high in the cues. This one made a little bit of a lower high. It's really sloppy, gapping around, low volume, okay? You'll notice here that on the weekly chart, it couldn't get up to a new high like it did on the cues. But again, these ranges are so large that if you put a stop in above these highs, which is the only prudent one, if you go in and try to make it tighter, you might get clipped. You can see that the chart is sloppy. It's chopping up and down, taking out pivots, candles. They don't mean crap, okay? But major pivots, okay, are more reliable. But the problem with major pivots is you got to give them a lot of room. Therefore, you got to get a lot of room in return. And guess what? It's a white knuckle ride because the freaking thing is all over the place on the way down if you're going short or the way up if you're going long. Okay? So that's what's great about stocks. I'm going to share with you some great stock ideas, okay, on my videos that are going to show you things that don't trade this sloppily. And you can have a little bit more tighter stops, reward, risk, and reward. Okay, although all things can happen. Something could come out, terrorist attack, something could happen politically. It doesn't matter. That can cause wild gyrations, FOMC wise, whatever. Okay, someone could say something, it could trigger something. But usually, if a chart trades pretty clean, meaning the candlesticks respect one another, they open and close close to where the previous ones do. Typically, that continues. But I would say I haven't seen any case where it always stays that way. There will be things that'll gyrate and it will jump, and that's the risk reward of trading the market. So the spies, okay, you've got support here around 200. You got resistance here around 210, 212, right? You can see the range. You can see on the weekly chart here, it basically bounced in this whole area here, came down, took out these lows, came all the way back up, okay, and now it's just kind of sloppily around in this area again. Same 212 highs, 200 lows. Okay, but if we get below that, you can see we've got a cluster of support here, although it's really, really sloppy. Okay, and again, my bias is short in general, okay, on the markets. All right, so in this free video here I'm going to talk about some of the major names because I know a lot of people trade these, a lot of people are owners of these stocks, okay? And I'm going to tell you about the danger signals I'm seeing here on Amazon. All right, first off, the monthly chart. Look at the move to the moving average here, okay? You get the move, it stays pretty controlled. It gets this far away. See this distance here from the moving average? It comes right back and gets pulled in like gravity. Okay? Gets pushed away, and then all of a sudden look at the distance with which it's moved. Okay? From this moving average. It is extended. Now, this is a double-edged sword, so listen to me carefully. If the market stays strong and we go higher, which is possible, this is one that you want to be watching long because it's so flippin' strong. Okay? However, remember what I said earlier, if the market starts to fall apart, and my feeling, based on the number of charts, I scanned a ton of stocks earlier today to prepare for this, to prepare for my trading week next week, because I've taken some time off, holidays over, it's time to roll the sleeves up and get back down to business here. Everything, man, is rolled over. The overall market indices are holding up, but there's a lot of stocks that are just getting hammered, crushed, down, serious, long downtrends, multi-month downtrends, and big name stocks too. Okay, now this is one of the ones that's really, really far up there. Okay, I highly suggest. See how it broke out here on the daily chart just a couple days ago? That is a very, 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 very risky based on that monthly chart I just showed you and the weekly chart here. Also, look at how far, the farthest it can get from here, and it usually pulls back, right? Okay. If it goes beyond that, it probably won't have a whole lot of juice left, okay, to keep going. A lot of buyers to want it, I got to have this stock, and more people say, hey, I need to take profits, especially if things start to fall apart. So here, if the market starts to fall apart, I love this as a short. If the market stays strong, look at it long. You got to stay dynamic and flexible. Right now, if the market gets short, this failed breakout, man, if you're aggressive, you can get short in this thing here, right around this price range, okay, with a stop above 700. I would give it 700 and change. Okay, and looking at this, I would look for a regression to the moving average here on the weekly chart. So a moving average puts you down about $600 a share. Now, depending on how many weeks, because you go out 2-3 weeks, it starts moseying along here down to 650, 640. That moving average is going to catch up. Okay, so keep that in mind. All right, but I see this breaking. I see this breakout failing, and I see it taking out 640. I see it taking out the stops here, and possibly even here. Okay, so if you're aggressive, you can look to get short either options, whatever, straight up. I am looking to do that. I'm not in right now. I'll tell you right now, I'm not in it right now, but I am looking to short this thing. Okay, and again, your stop's above $700 a share. Okay, all right, so that's the first one I want to point out to you. And if you're long in the stock, hey, congrats, what a hell of a run. Okay, I don't know where you got in, but chances are if you bought it any time in the last 2 months ago or before that, you're up pretty good, right? So what I would suggest if you're in it long on a longer term, take some profits. If anything, put your stop in here at 660 and take some. Say you own 1,000 shares of this. Okay, that's a lot of money. Okay, but if you got 1,000 shares of this, and I think the majority of you probably don't, but if you do, okay, put your stop in right in here at 660. If it comes down, take profits. Take half off the table if you haven't already. Okay, if you're more want to stay tighter to it, then you could just go back on a trail stop on the weekly. You can go down here over under 600 and about 665. It takes out that low, get out. This looks top heavy. It looks like it's going to fall apart. Be warned, okay? But again, this could go to 1,000 in the next 3 months. Okay, do not hang your hat on, oh, the chart looks extended, it can't get more extended. These, in fact, are the most dangerous to go against the trend because they're so strong. So again, if the market turns around and starts to break that higher QQQ, starts to break that 116 mark, you better start looking at this as a long. What I'd like to see this breakout fail. Maybe it comes down to 660, it kind of bases along here, and then sets up, and boom, then you get long. Okay, so big lesson on a big name there in Amazon. I do want to mention here also that I'm just going to be talking about swing trades. Overnight, multi-day, multi-week holds here. I have a number of day trading ideas, spectacular ones for next week, but I'll put that on the other video since most people watching this are more longer-term traders, I think. But anyway, Skyworks Solutions, okay? This thing's had a hell of a run on the weekly chart. It's obviously done nothing since July. It's been moving down. It's gone from 110 to about 70, and then about 76 right now. Notice here on the daily chart, it's pretty sloppy. Okay, it's try to change trend here, the crossover here, but now we're starting to cross over again. And look at this. The crossover, the moving average here on the weekly chart, we've retested, we've made a higher high into this resistance area, got pushed right back down. I like this short underneath these lows. Underneath about 76, okay, tight stop at 83, looser stop at around 90 above this high, okay, and you're looking for a move down around $50 a share. And again, like I said, this probably won't happen in 3 to 4 weeks. It's probably going to take a few months to get there. But again, you don't know what's going to happen. So again, bullish market. Any of the shorts that I'm bringing up in these videos are pretty much off the table. You're on your own. Okay, they can still go lower, but if the market starts to take off and break those resistance highs and goes higher, do not be shorting. Go long with the strongest stocks like the Amazon. Or if things start to fall apart, look for some of the leaders to fall apart. Get some of these more weaker ones that are already downtrending or starting to downtrend. You want to catch those trends early, ideally, okay, and get short. So Amazon, Skyworks here too, under these lows. Like it, okay? Watch Skyworks. It's rolling over. Definitely looks like a decent short idea if things start to roll over here in general. All right, one more popular one I'm going to do on the short side here that, I may not be popular with you guys watching this because you may get pissed that I'm saying this, but again, the facts are the facts as I see them. And again, I'm not always right. Okay, so if you own these long and you don't want to take some profits, great. If they go higher, great. I know that if I get short, I will have stops in place, and if they go higher, I'll be out and I may go long. I may turn around and go long. Right now, though, as of January 2nd, this looks like a short idea too. It's sloppy. Look at this weekly, right? It's been in this range here between 120 and 90, okay, over the last, good Lord, since October of 14. Okay, that's a pretty big range though. Now you can see the triangle forming on the daily chart, going lower, rolling over the moving average. Okay, fast one over the slow. You got a crossover here on the weekly. Okay, it came down, pulled back here nicely. You kidding me? I like it short right under here, right around $100 a share, a little over maybe 101 under this pivot here, $100.92. Okay, a short break there, stopping at about 106. Give it some room over there. Again, use your plan. Use your knowledge of the market to put your stop in a smart place that you find works for you, because you will get shaken out of swing trades sometimes with a tight stop. So I usually give mine some room on my day trades as well as my swing trades, and that's what we're talking about here. Okay, so watching this short, you got a roll over. Target wise, I mean, you got tails here around 85 to 87. Okay, so that'd be my first target on this thing, right around there. You got also a bottoming tail in here, so I'm probably going to get some support at 95, okay, as well. But this monthly chart is also looking pretty toppy, okay. Pretty wide range slop is looking like it's going to have trouble. But now you see right shoulder, head. It may take another 5-6 months before this rolls over. It may form another right shoulder here if it didn't already before it goes. Okay, so again, have a plan, have a stop in place. But that's my last short I'm going to share on this video. And again, if you're swinging long on these things and you've been making money, I draw your line in the sand here. If you're on this thing, I'd put my stop in right around the 100 area, just below, to get out of my shares. If you're swing long in this thing, again, maybe a part of your shares, if not all of them. Okay, because again, like I said, I'm bearish right now, but the market could go higher. Okay, and if it does, I'm going to change. I'll have my stops. I'll get out, and I'll look to go long if the opportunities present themselves. Okay, so let's look at a couple of long ideas real quick. Okay, this one just for a little scalp, meaning a multi-day hold. I like the way it's come up here strong on volume. Okay, it's basing out here over the last week near the highs. Now there is a resistance area here to the left. Okay, but oftentimes when we take out new lows, okay, it drains out a lot of this resistance in this area, in my opinion. So I'm watching this as a possible long. It's real sloppy on the monthly chart. You can see it's uptrending, okay, but it's starting to roll over. The moving average is getting weak, so that's why I'm not looking to hold this for a couple months. It may be a week or two if it breaks above these highs. It'd be over 31, stop at around 29 and change, okay. Looking for a move to the high here, 34, 35, $36 area. Okay, on SunPower. So that's a long idea that I'm watching. Again, market starts to collapse below those lows. Things start to fall apart. Again, I don't care if it breaks over 31. I wouldn't be taking it. Okay. So again, you need the market on your side ideally. So on these long ideas, you want the market to be pushing up toward those highs or breaking above them. Okay. Ideally. Now, again, like I talked in the other ones, if you want to anticipate it, it's fine. So for example, if next week it starts to break 31 and the market's kind of hanging sideways, holding it up, there's no need to wait for it to break to new highs. Take a shot, put your stop in, get out if it hits it. Ulta's another one, okay? It's been on a long tear, and it's getting extended on its monthly chart. Okay, so this is another one that you may want to go think about shorting if you get a setup, if things really start to fall apart across the board. But this is a leader right now in this long side. Okay, you'll notice it's up here. It's basing here for many, many days. Okay, pretty much the whole month of December after this giant push up has gone sideways. Moving average is catching up to it. It's holding. This looks prime for a long idea, okay? And another one where, in general, my general take is the market is going to go lower. So on these long ideas, I'm in a more short term, keeping a tighter leash on them, trail stopping, pivot trail stopping, using management tools to milk out the profits best I can, okay? But this is a strong puppy right here, this Ulta. Okay, watch it. It's up here near the highs. Look for it to set up. Okay, third long I'm going to share on this video, and this was I made a really nice profit on this one, trading it last week. Beautiful move off this low here, okay, on an intraday chart. You'll see the 60-minute chart here, okay, as well as on the 15-minute chart. If I were to scroll back there, okay. Anyway, let's talk about the future because that's all that matters. This thing is extended down. Okay, it's gotten crushed. It's way away from the moving average. Okay, it's come down here. It had this big red candle day, and then it moved up strongly in volume. It's been basing in low volume. Now it's hitting the moving average, so it's kind of like hitting the breaking point, where it's going to try to break higher, test this 30 area, or if it's going to drop, or pop a little bit and drop. Okay, but when I look at this monthly, and I see how far it's come down, and the massive volume and the takeout of this pivot here with this last month on this volume, okay, I think we've got more bounce in it. And if anything, it's more of a, day trade would be safer on this thing. But you see on the 60-minute chart, is toying with these highs here. If it can break above, it's got a void up to about $30 a share. So say you take it over 25, say 26, just to round numbers, you're looking at about a $4 target. So you don't want to risk any more than about $1.50 on your stop. So if you get into that area, you're looking, well, where's $1.50 off 26? It's 24.5 right in here. Okay, So you put your stop in that area, and there is support in that area. Your safest stop is probably going to be down near the lows, around 23.5, down here in this area here. Okay, so if it doesn't make sense reward to risk to your target, don't take it. But if you're day trading, it gets up to 26 and it sets up and gives you a 15-cent, 30-cent stop, and you pull $1 out, that's your payoff. Okay, always demand good reward for your risk. All right. All right, guys, hope you enjoyed this video. Hope they give you some clear pictures. There's a number of other names, too. I mean, I didn't talk about Facebook yet. I didn't talk about Netflix. There's so many other stocks here that there are breaking points. I'd be aware. I'd start taking some profits if you're long. And on some of the names, most of you, if you're not long the FANG stocks or some of these big name stocks, you're probably in pain because you'll see a lot of them are doing maybe not what WMB here is doing, but a lot of them are getting hammered. I mean, some of the major names, Caterpillar, downtrend, DE, downtrend. Nike, of course, looks kind of toppy. Okay, Coca-Cola here is holding up pretty well, but it's sloppy. Same thing with Pepsi, holding up here pretty well. So these are strong ones you can kind of keep an eye on. Nike looks toppy here. It looks like it's ready to come down. Okay, watch it. Be careful if you're long on that. Take some profits if you hadn't already off earnings that popped up and sold off big time. It was really a really nice, fairly easy day to short, to fade the gap on that one. And Under Armour here is coming down here pretty good off the weekly chart and in a downtrend confirmed on the daily chart. Okay. All right. Hope you enjoyed this video. Happy New Year to you guys. Let's rock it this year. I'm looking for an even better year. Had a record year last year in 2015 for me personally. Gonna make 2016 even bigger, better, bigger, and more lucrative and fun year. Talk to you guys soon.